This is the MTPredictor weekly market update for February 3rd. So January was definitely a positive month there for equities. You can see I've got the Dow Mini on the right here, the S&P futures in the middle, and the NASDAQ. If you remember some of you that may be a little older, remember the song from Sesame Street. One of these things is not like the other. And you have to pick out, which one. Well, you can compare the Dow and the S&P here. I mean, they're almost, nearly identical. You really can't tell the difference between the two charts. But if you look at the NASDAQ here, this one clearly has, different than the two on the right here. And you see the NASDAQ has failed so far to make any new high. Now, it may eventually, and if we look at the let me just bring in before we look at the Dow, just look at the NASDAQ composite on the weekly chart. The NASDAQ, the cash, looks a lot better. Still hasn't made a new high, but it looks like in a much better position. But the futures are really kind of lagging here, if you will. And typically the futures tend to lead the cash, but not happening here. So it's something to take note of. Well, let's just zoom in here on the S&P here and just kind of look at again what we've got. So again, I did anticipate that we would get to 1500 in the S&P, and we did that plus. And I said if the Dow gets to 14,000, then we should see the S&P overshoot that 1500, which obviously it did. The next major resistance coming from, if we kind of scrunch this up, these prior swing highs back here generate the decision point resistance areas. This one is where we corrected last, and this one's going to come in right around 1520 in the March contract here. So that's the next major resistance. Now I've been watching that. You can see the bottom here is the OBV, the unbalanced volume, and the volume is following the market higher, which is good. We don't have any divergence there. If the volume was coming off as the market is moving higher, then that may be a problem there, or heads up. We don't have that yet. We'll see what happens if we get up in that 1520 area. If we look at the Dow future here, you can see I drew the line in the sand. Now the future contract, you see, hasn't quite gotten to 14,000. If we look at the Dow cash, it's NASDAQ. Let's look at the Dow cash. Okay, you can see here's 14,009 was achieved. So the Dow cash did hit 14,000. That's been achieved there. All right. So we talked about this last week when I posed the question. Dow 14,000. I said it's so close. This was last week, that we should see that. I think that's going to be an attractor, and that they would go for it. And the Dow cash has achieved that. But the future is just lagging slightly. So we'll see. It should get another push. I would think that the future should tag that 14,000 as well. Let's just take a decision point off the last swing here. So we've closed above that. This high last week was at 13,962. So if we get to 63, then would tell me that they're probably going to make a run for that 14,000 in the futures. Now if I scrunch this chart up a little bit, you see the prior swing highs. Here was the high peak back in 2007, in October of 2007. If I take our decision point tool, if I can get that on there, scrunch this up, it gives us a major resistance, it's much further up. Let's take one a little inside that from this one, and let's drag this one over. And you can see if I can get it on there, right about there. Okay, that we're in that resistance area there. So here's kind of the next levels. One we're in, then there's 14,000. This next level, the major resistance there, will come in around 14,730 area. Right, that's a bit of ways off there, but we'll see how they progress. Again, the volume still looks good up here. It was January, so you tend to get a lot of inflows and monies and stuff into the market. So we'll see how that finishes out. But again, just gonna keep my eye on the fact that the futures are lagging a bit, and of course the Nasdaq has not made that new high yet. So either it's got to make that high and confirm with the other markets, or like I said, it's going to end up pulling everything down. Just remembered it is Super Bowl Sunday here, so I'll try and keep it a little shorter. Here's the trade from oil on the weekly chart. Remember there was that TS1 here. Didn't quite get down to the 80 level, but you know it had a setup here. The STF was neutral, meaning go long or short there. This obviously is a long setup. Hasn't quite achieved the target yet at 101, but has been steadily making progress in that direction. So we'll see if it can finish out. You know, this has been kind of a pretty, once it started, a little slow to get going, and then began moving in that direction. It's possible we can get we're kind of in a bit of a resistance here. Would be a decision point off this wave B swing here. So we could get some type of pullback before we get to the target, but we'll see how that finishes out. At any rate, stops can be at break even on that. Gold here, again we had the long signal in gold here, again below the 50 period, above the 200 period. Those have typically been good buying opportunities. If I put the analysis on, you see the setup calls for 1803, 80 at the target. And I pointed out, going back to the beginning of the bull market, each year we've made new highs. Here's a new high in 2011, but 2012 we failed to make a new high. So we may be in a period of longer consolidation. We'll see. If we look at silver, if I bring silver in here. So silver here, again, the same basic setup as in gold. The long here with the target at 35.63. That's made a little progress. I'm going to make this a little bigger here. But the thing here is, like I said, maybe some more consolidation, but we've got, see the succession of lower highs here. This was a lower high as well. This was a lower high. We really need, if this thing's going to take, break out and we had this breakout that we did. So we took some longs back here when this little line here got broken in this triangle to the upside, that little trend line here, for a nice swing trade, and then things pulled back to the kind of support area here where the TS3 is, and but this succession of lower highs, and we've had a few higher lows here, is kind of scrunching things in. That if we can get a break, not only do we need a break though, because we got a break here, but we need to start seeing closes above these swing highs here, and then progressively each one, and if we're ever going to see a challenge of 50 and a takeout of 50 into 60, we're going to have to see these markets, gold and silver, really make these moves to get out of these, this area here. Obviously we haven't seen that yet. We'll see. This would be a positive if it can get to the target here. Again, this will be resistance, but if we can get at least get a close and get a new swing above these areas, that would be a positive. Otherwise, I think we're going to continue to kind of languish, in this 28 to $33 area, $34 area for a period of time. Eventually it'll break one way or the other. We'll see. Like I said, we saw the position in gold, which was below the 50 period and above the 200 period, which is typically a good buying opportunity in a bull market for that, for gold. So we'll see how that continues. We'll leave it there, and we'll look and see how things shape up this coming week after the Super Bowl here. So wish you all a good trading week, and we'll see you back next Sunday evening.